Hello everyone and welcome to Day Trader S&P 500. Today is Monday, December 19, 2022. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. We want to get our YouTube subscribers caught up with what our monthly subscribers and annual subscribers have received. Let's start with the Qs. Here I'm going to look at things from the B wave high in August. You can see we have a 1 down, a 2 up, 50% retracement, 3 down, 4 up, 382 retracement, 5 down for the larger wave 1. There's a wave 2 that did just above a 50% retracement, almost a direct hit within a couple points, and wave 3 down is in progress. This is a daily chart, and we have 1, 2, 3, 4, 5 days to begin the beginning of wave 3. Of course, this will take on a 1 down. I'll show you guys this. See if I can get this in there. This will take on a 1, 2, 3, 4, 5. Let me see if I can get those lines in there for you guys so you can see them. There you go. That's what we should have in this and this wave 3. These 5 waves will make the larger wave 3. Gain equality with wave 1 at 216. Okay, that's what we're looking for, and of course we want that 4 to stay below the wave 1 low. That's the Qs. Let's get right into the cash S&P. Okay, here we go again. Same chart. The S&P's topped in January, where the Qs and NASDAQ topped in November. They're over a year old. S&P and dollar almost a year into a bear market. Won't be long now. Again, we have 5 waves down for the larger wave A in parentheses. Counter trend bounce up in B, direct hit price and time, a perfect 618 retracement, and again, a 1 down, 2 up, 3 down, 4 up, 5 down for the larger wave 1. There's a wave 2. Notice that the S&P retraced almost a 786 retracement, and here are the Qs, which are similar to the NASDAQ. They barely did a 500 and didn't do a 618. Again, for you new subscribers out there, the NASDAQ leads on the way up and leads on the way down. If this was a bull market, the NASDAQ would be leading the charge, but it's lagging and it's behind because it's a bear market and it is below the S&P and the Dow. And I've had some questions about that too. The Dow is leading, the S&P is in the middle, and the NASDAQ is lagging. That's typical in a bear market. It's happened before, and it'll probably happen again, and we're in a bear market. Okay, this is the C-wave targets here, log scale 3264, arithmetic 3143. This is a daily chart. I like to use arithmetic on maybe a little bit longer. I'm sorry, log a little bit longer on weekly. But you can see this the same. You can see that trend line again from the all-time high to the wave 2 high to the B wave high to this second of wave C high. Poked above, rejected, poked above, and now resistance becomes support for the bear market. That line should continue to hold. Any counter trend bounces up here in the third wave. Let's get a little closer here. That was daily. We're going to get an hourly. I have some picks here too because this is kind of incomplete from that 4100 high, and I think I might have that in that pick, but I'll review it if not. Yeah, on 12/1, the dates are in purple. The S&P cash hit a high of 4100.51, and then on the 13th, it made a higher high by less than a point, less than a half a point at 4100.96. Where you see the futures, they changed the contracts, and it was a big difference. But the turn date was 12/4, which was a Sunday, I believe, and 12/1 would have been 1 day, a minus slippage of 1 day, and now this is more like I think 6 trading days. But anyway, that 12/4 turn date served us well. Okay, getting back to the daily from that 4100 on the 13th, which I just spoke of back here, right there. Okay, from the daily again to the hourly, we have a 1 down, a 2 up, and then we have a couple things going on. You can see the 1.618 right here is 38.77 and it hit it. Okay, so we could put a 3 there, and I got a picture of these Let me put that in if I can. Okay, and we would do that helps. Add the third one. There we go. And then a 4 here, and then a 5, and then um, an extra leg. Okay, that's why that doesn't count so well. And we got all this information in our reports. I'll actually read that to you guys. Or get a 1, 2, 3, 4, 5 there, a 3 there, a 4 there, and a 5 for the larger one. I believe that is what that is. But there was where 3 gained a 1.618 multiple, and this is no retrace. Virtually, it's not anywhere near what would be a 382 retrace. You can see if we could get the right thing here. Let's get this here. If that was 3 there, the move up didn't come anywhere near the 382. If that was 3 down, 4 up, didn't come anywhere near the 382. So this tells us one of two things is happening. And I'll just get right into, since we're on the cash S&P, I don't know if we need to get any lower than that. I think not. Let me go to that report, because I got it all spelled out. The special interim report deals the cash market, and it goes to annual subscribers. And then the e-minis are more of a daily report. It goes to the monthly subscribers. But here is our report we put out today. Okay, third wave down of at least 2 degrees of trend. This pick here is a lot better than the chart. Okay, I get that in there for you guys. There's that 1, 2. I've got the preferred count in black, the alternate count in red. Okay, the alternate count, yeah, I had that 3 off originally, but it's here. And you can see those 3 targets, the 1.618 was 38.77. It went below that, and it went down to 3,800 in the cash. You can see there's the 1.618. The 2.618 is just below it, 37.69, and the 3.618 is 36.69. Why did I bring that up? Because this is the third of third wave, the most powerful, and it can take on any multiple it chooses. Okay, you can see here wave 3 has fallen below the 1.618. There's a 1.618. There's the low so far. 3 important reminders. It's a bear market. Surprises will be to the downside. Third of third waves are the most powerful and can take on any Fibonacci multiple they choose. That means not just a 1.618, but a 2.618 and a 3 and possibly a 4. Okay, the S&P overshot the 1.618, so our primary count says this is going down, and it's going to go down and extend more than a 1.618, and that's why I put these 2 and 3.618 multiple prices on there. The alternate count is in red, and that counts 5 waves down here, and then we're going to get a second wave retracement up to one of these targets, but it should not go above the beginning of wave 1, which is 4,100. Okay, so that's it. There's the alternate count, there's the extensions, and it's just math, and I'm reporting the numbers. And the alternate count, we should see this thing go up, and there's those targets in writing, which were also on that chart. So let's move from there to the E-minis, and there is the same daily chart, the blow off top, the 4180. You can see the 12.1 high is over here, and the 12.13 high is over here. But again, wave 3 is beginning. Wave 3 gains equality with 1 at 33.55. It should go below this B wave low, and it should take out this wave 1 of C low, 35.02, back in October. So it's off to a good start. Again, it's the third of third wave, so we got to look for surprises to the downside. And again, here's that 12.13 high in the futures. You can see the 1 down, the 2 up. And this is subdividing, so perfectly. It's crystal clear. We got a 1, 2, and then wave 3 in parentheses is a 1 down, 2 up, 3 down, 4 up. Excuse me, and a 5. There's 4 in parentheses. There's 5 for the larger wave 3. Again, that 4 retraced nothing, so that's why. And it went past the 3, went past the 1.618. So that's why we think it may be going to the larger 2.618 or even the 3.618. If I can grab this red line, that would be nice. There is the wave 3. Okay, and that retraced virtually nothing. It didn't get up to the 382, which is up here. And again, I have that in a pick. Let me show you guys, or I can show you guys the report for the monthly subscribers that went out today. There we go, the post-market close. Get you guys caught up. Again, I'll be out of town 22nd to the 27th, so there will be no reports during that time. Okay, here is the E-mini futures, the same hourly bar with both the preferred count in black, the alternate count in red. We'll know, and I put in here, how do we know? If the market moves above this wave 4 high, then it's probably seeking out these retracement targets in red. If it moves below today's low, then it's seeking out these 2 or 3.618 multiples. That's what the Elliott Wave and Fibonacci does for us. It gives us, gives us parameters. We have upside and downside parameters every day. Okay, so you can see move. This is what we're talking about. This morning, we put out a report. A move below, yes, Friday's low indicated that either the fourth wave up was complete or the third wave down was extending. We think it was extending because the fourth wave didn't retrace hardly anything. We had further downside targets, and again, it achieved the 1.618 and below it. There's those reminders again. Alternate count 4 was extremely short, and 5 down was even shorter. If you can see that in the red up there, okay, that was short. 5 gains nowhere near equality with 1. So we think that's why the black count, or the count in black, is the primary wave count. Okay, I think I have some picks for you guys here. Might make it a little bit easier to read. This is back from Friday. We were looking at those 3 down targets there. As you can see, the 1 and the 2, okay, and 3 went to the 1.414 and then some. And I think we had another one on Friday which showed what we were looking for on the hourly bar. There's where those 4 targets, and 3 hit on the 1.414. Hadn't yet achieved the 1.618, but it did that. Took care of business today on Monday. What else do we have here? We have the mini futures on the hourly. Again, here is that upside and downside parameters. A move above 38.99. We're likely going to one of these targets in a wave 2. A move below today's low of 38.27 and a quarter, and the market's probably going to seek out the 2.618 and or 3.618. I think I have another, unless I have a duplicate in here for you guys. Let's see, there's the hourly. This was the pre-market open at 7 in the morning. That's where we were looking for those 4s, and they never developed. And a move below here we said would trigger a move to 38.42 and or lower, which it did. Okay, there is the hourly on the ES. I want to show you guys that that other one, because I like how that that has both counts on there. I believe this is the hourly. Yeah, there we go. Third wave down, at least 2 degrees of trend. Remember, surprises will be to the downside. Third waves are most powerful, can take on any Fibonacci multiple they choose. Fridays and Mondays are typically down days in a bear market, just as they were up days in a bull market. But we have our parameters here. That way we won't get whipsawed. We get a move above here, we know where our targets are to the upside. We get a move below here, we have our targets on the downside. So we're ready for tomorrow or tonight when the futures open. Okay, that's it for today. You guys have a great rest of the Monday, and until next time, take care, everyone.